Okay, guys. Well, it looks like we are live here. Super excited. This is our first episode of Liquid Lunch powered by CryptoQuant. For those that don't know, right, CryptoQuant is a data and intelligence platform built to advance the adoption of crypto globally, right? We believe crypto is a very important part, for humanity as we move forward into this new world. My name is Garrett, and I will be hosting a series of webinars giving you the most up-to-date analytics and research done by our market experts. Next up, we're going to have our head of research, Julio Moreno. We're going to get into the Bitcoin ETF discussion, right? So today is all about, figuring out where the alpha is with the Bitcoin ETF. It's all the buzz. It's what everybody's talking about. And so, Julio being our head of research, he lives and breathes this stuff daily, okay? Every day he is looking at different metrics on what is happening in the marketplace, what the miners are doing, right? What the institutions are doing. And so Julio has a slide deck today that we're going to kind of walk through and see kind of what's going on. So Julio, do you want to go ahead and share your screen for us?
Yeah, so basically we're going to discuss like three topics. The first one is the Bitcoin ETF, and especially research report that we published on mid-October that we published about how the ETF may impact the market cap of Bitcoin. So is that first, the ETF, then a little bit of discussion of what is happening to Bitcoin miners recently. Okay. And great. Then the last topic is the mini altcoin rally that we are seeing in the last few weeks.
That's so been also
fun. Yeah, a discussion on that. So let's dive into the Bitcoin Spot ETF approval. Just to give a context on why people think that this is important, we are seeing here the price of gold. And so we see in this line when the GLD spot gold ETF launched in the US, and people see this chart and say, oh, after the launch, it coincides with the bull market.
It went to the moon, basically, right? Gold went to the moon after that ETF launched.
Yeah, exactly. So the people are doing these comparisons, right, with what could happen to Bitcoin. Of course, we need to say that this bull market was like a broad, also a commodity bull market, right? So it has some of those two effects, but it's still important to just keep in mind as in context, right? On when we think about the possible effects of a spot Bitcoin ETF.
The only problem people have with gold, though, right, is that we don't know how much supply is actually out there, right? Some of the markets are maybe controlled, right? You've got some of these institutions getting in trouble for spoofing and different types of trades that they're faking. And so, with Bitcoin, we have instant verifiability, right? We know how much supply is out there. We know where it's at. And so, if you think about that, you can't really contain this beast at a certain point, right? Because you know where everything's at. And if people don't have the Bitcoin, you get certain, things fail, like the FTX collapse. I love this chart. And so, yeah, let's get into it.
Yeah. So, and with it in context, we can now see here, like the companies that have applied for spot Bitcoin ETF in the US. This is in the US. Of course, the big names there, with BlackRock, Fidelity, all of those that control a lot of money, right? A lot of assets management. So that's also why people are getting really bullish with this spot ETF, because there's a lot of money that these companies can bring to Bitcoin. And so here, just to notice that, the final deadlines are approaching for some of these spot ETFs. The next one is early next year for ARK. And then we have a bunch of final deadlines for around March.
I think, if Gary's going to finally go ahead with this, he's probably going to approve them all at once, right? It wouldn't make sense to do them kind of one by one. So I think he'll probably delay them again. I see some of these like 11/11, but it seems like a lot of them will get delayed. And we'll see what happens on 3/15 next year. But that looks like, these institutions are salivating for this asset, right? They really can't get into it yet because they don't have legal clarity, that Gary Gensler is not giving them. But look at all of that money. I mean, that is trillions of dollars, and even a small percentage of that wealth transmitting into Bitcoin will be a huge, huge cycle indicator for this asset. Let's continue, Julio. Love all the stuff so far.
Yeah, so exactly what I've been reading and hearing is that the approval will be like everything at the same time, right? That's how the market is seeing it. Like, so just keep in mind, these dates that are coming. And so that in mind, we did a research piece, and so the answer that the question that we wanted to answer is, okay, as money pours into Bitcoin, fresh money from these institutions, from the clients of these institutions, how that may affect like the market cap of Bitcoin, given that some amount of money enters the market. And so the approach that we follow, of course, is using on-chain data and seeing how it affects the market cap of Bitcoin. And so for just here, we see a metric that is really what is, it's called the realized cap. So what it really measures is how much money has entered the Bitcoin assets, right? So it increases as new money comes and buys Bitcoin at a higher price than the previous owner, right? So that's a measure of how much money is entering into the market, and you can see that there's a relationship between the market capitalization of Bitcoin and also the realized capitalization of the amount of money that has flown into the market. And so in the last bull run in the top, the market cap was 1.2 trillion and the realized cap was reaching around $500 billion.
Not long ago, the market cap was over 1 trillion. I remember it, right? Those were the good times, right? But I think we're going to come back there. And gold, right? Gold has a market cap of what, 10, 12 trillion? So we're like, we have a 10x to go as far as market cap, depending on, when the ETF gets approved and when all this fresh money comes in. This is interesting. Love this chart.
Yeah, so and what we did analyze the relationship, right, between realized cap, so new money getting into Bitcoin, and what's the effect on the market cap. So that's the how much does the market cap grow when the realized cap grows, right?
So there's a multiplier effect, like 1.2 trillion doesn't have to enter the market to equal a 1.2 trillion market cap. There's a multiplier effect. So every incremental amount that comes in, it multiplies the effect of the actual market cap, which is a great.
That's the idea exactly behind that analysis. And we can see it here in this other chart, which is the same. It's the market cap and the realized cap, but here we are measuring like the 1 year change in that, right? And so when the realized cap starts to grow, how much does it impact the market cap, right? And so at the tops of the market, this is the 2018, 2021 tops. And so you see that relationship of around 3 to 5 to 1, right? And so what we can say is, so for every dollar that enters, the fresh dollar that enters the market, you can get a $3 to $5 increase in the market capitalization, right? So that's the multiplier effect that you were talking about. And so with this in mind, you can say, okay, so all these companies are going to bring more money. And so if they, let's say, and the numbers that the market had been talking about is like, let's say they just bring 1% of their assets under management, right? And so it will be like a $150 billion of total coming in fresh into the market. So that will translate to 3 to 5 increase in the market cap. So it could be like let's say round numbers, $500 billion to $1 trillion, according to this historical relationship that we see between how much money enters the market and how the market cap responds to that.
Awesome. It looks like there is a great potential for huge amounts of market cap growth in this next cycle. Let's continue.
Just for context here, this is the GBTC. So GBTC is the largest fund that holds Bitcoin. And you can see here, this is also the realized cap of GBTC in the last bull market. So you can see how, there's a clear like correlation right there, like increased fresh money entering into this product, GBTC, and it corresponding to the bull market that we saw in 2020, 2021. And so that's another thing that we analyze, right? Like how this type of products that give access to more investors to Bitcoin can have an impact on the market cap of Bitcoin. And for GBTC, the realized cap increase was just 5.5 billion during this period, right? So it's a really low amount compared to what these other institutions can also bring to the market. So it's an interesting point.
It is. And GBTC, they're a unique entity where they actually can't sell the Bitcoin that they've acquired. They're stuck in their Bitcoin holdings. And so, that delta between, what the spot price of Bitcoin is and what the discount rate is with GBTC has actually decreased significantly over the past couple of weeks and months. So it's interesting to see that gap shrink as we get back into this bull run.
So
Awesome.
yeah, so for the ETF, so the bottom line is, depending on how much money these institutions bring into Bitcoin, but that will have like this type of multiplier effect that we estimate between 3 to 5 times of what fresh money can enter. So that's something to keep in mind in terms of the ETF, and to give just some context on how that impacts market capitalization. The next one is just talking about a little bit about Bitcoin miners' behavior and what's happening with the network activity, fees, and how that impacts Bitcoin miners. And of course, it's really important as we, next year we approach the halving, right? And so the fees.
Yeah, the hash rate has been going absolutely nuts this past year, right? Like the hash power is the actual power energy of the network. And like we're crossing like 3x that of the United States Navy in far as distributed power, which is absolutely insane, right? Michael Saylor likes to talk about that. And so the network is growing in this exponential power, and it's just crazy to see. So I love watching the miners and seeing their behavior, because Bitcoin is incentivizing cheap energy, right? El Salvador is pulling energy off a volcano, and you've got people in very cold areas that are using Bitcoin miners to heat things. And so it's such an interesting topic, because it's not just fossil fuels powering these things, right? This is like clean energy. A lot of clean energy is powering these Bitcoin miners, and so it's fascinating to see where all this energy is coming from to power these things. So let's get into it.
So for start with revenue, like the daily revenue that miners get, overall miners, we're talking here about the entire mining industry on Bitcoin. So one important thing to notice is that we reach a level of daily revenue around almost $42 million in daily revenue recently. And so this is the highest since April 2022. So good news for miners, right? They're facing like increasing competition with more hash rate entering to the network, right? But at least there see that their revenue is increasing, has been increasing. Of course, one is because the price of Bitcoin, right, is increasing. So that really helps them as we transition from the bear to now these early stages of the bull market. So that's one, like the revenue is increasing, and it's at the highest in April last year. But also, you see the fees, which is, they're gonna become more and more important, like the fee aspect of the revenue, because of, after each halving, the new Bitcoins that are issued are now half of what they used to be. So we see also that fees have spiked in the last few days, and also
those Ordinals guys, right? The BRC20 guys. I mean, what are those guys doing? They're putting JPEGs on layer one. Is that what's going on? And the miners are just loving this, right? They are absolutely cashing in.
Exactly. We're gonna dive into what that's the main reason.
Oh, okay,
right?
Perfect. I love it.
Exactly. Yeah. So we see these fees spiking to on a daily basis above 100 Bitcoins being paid on fees. And also, as you said, like this is mainly being caused by, this ordinal new protocol, the inscriptions, the BRC20 tokens, bringing tokens, and also like NFTs, but directly to the Bitcoin blockchain, right, on chain. So this is the guys are doing this, are causing this spike in fees. You can see here this purple area is a type of addresses that is used to inscribe these NFTs or to issue these BRC20 tokens, which is called the taproot addresses. And so you can see as a portion, as a share of the addresses that are used on the Bitcoin network, they've grown a lot, right? And so lately, 40% of addresses used for transactions is this type of addresses, taproot, and so most of them are used by this use case of ordinals or inscriptions or BRC20 tokens.
It's an open competitive market, right? People are competing for block space. And so it's interesting to see what is going to be inscribed, what is going to happen with this, but interesting.
Yes. So that's from the side of the network activities being driven by that, and so also the fees, and of course for miners, that's why they want fees to increase their revenues. And so also we can see this in this metric that is called the hash price. which is basically the price of Bitcoin, but divided by the hash rate. So it's like an average revenue that miners get for each hash that they do, right? That they're performing. And so it's an average revenue metric that you can also see. It has also increased recently around 7 cents of dollars per hash per each hash. So that's also one of the metrics that miners keep an eye on. So we can see here, yeah, like the increase due to this recent uptick in fees and network activity. And we also saw that on May, as also inscriptions were also, there was like a little bit of mania on inscriptions on around May, and you can also see like the spike on this metric, and we also saw like that spike on fees. And so what's the, how do miners respond to these, like, okay, higher prices and higher fees? And so in terms of the flows, right, that we track miners, in terms of the activity of what they are doing with their holdings or what they produce. And so we track this as the outflows from miners. So how much of the holdings they are, sending out or selling, right? And so we saw this, the recent increase in price, and also on fees, we saw some, higher than normal outflows from miners' wallets. So an indication of, okay, maybe they are taking a little bit of profit. We've seen that, some of these companies, also the mining companies in the US, selling also some of their holdings. Of course, miners always sell. They need to sell what they produce to pay for operating expenses.
Yep.
But sometimes that selling is more, above normal. And so that's when you see like this type of spikes in these outflows that we track from miners. And this is what we've seen recently after we got to 36K, and also with the increase in fees. So this is what miners are doing right now. And it tells you something about, price or what to expect. They typically, like here is when this was when FTX happened. Of course, we had a sell-off, and a lot of the miners need to sell some of their inventory here. You see the spike in outflows to get cash, right? Because prices were too low. And
capitulating.
And also, yes, exactly, capitulating. And also when prices, they have rallied and they get to some high point, they also will sell some to get some advantage of those, higher prices or higher fees.
Yeah, and so the miners are directly, putting selling pressure on the market, because as they're mining these Bitcoins, they're dumping them onto the market, right? And so when the halving comes, that selling pressure actually gets cut in half, right? And so that's when we really are going to see, I think, a spike in the price as the selling pressure of miners reduces. And so we'll see how that plays out as the future kind of comes along here. This is awesome.
So yeah, that's for miners. Just to wrap it up, seeing increasing activity on the network, increasing revenue for miners and fees, but also at the same time they are like taking a little bit of advantage of that and selling some of their holdings. So something to keep an eye on.
Awesome. Going to the altcoin rally here too as well. Okay, perfect.
Yeah, really quick, just to summarize what's happening in the last few weeks and last few days. We've seen some increase in altcoins, Solana, also Ethereum, BNB, Link. So some of these coins outperformed Bitcoin in the last few weeks. And so you can see here in this index that we do, how the purple line is the small cap index, so small cap coins. And so you see here since mid-October increasing, a lot faster than Bitcoin, which is the orange, Bitcoin, Ethereum. So increasing much faster than the other coins. We were trying to see, why this was happening. And if you look at trading volumes, this is trading volume on Coinbase exchange, but it's comparing, like, there's a difference between the total Bitcoin trading volume and the total, altcoin trading volume.
Altcoin season back? Is that what you're telling us, Julio? Is altcoin season back?
I mean, I don't know if it's, back for good, but what we are seeing is that, yeah, that's what's happening. Like when the difference between the volume is now favoring altcoins, right? Like more people trading altcoins instead of Bitcoin. That's what we are seeing here with this chart, and this coincides with the rally in altcoins with increasing volumes on Coinbase exchange. And you can see that, for the most part of the year, this was decreasing, meaning that the trading volume of Bitcoin was growing faster than for altcoins, right? And now we have the opposite. So that's one of the reasons that, and you can, something to monitor, right? Like the volumes, where it's flowing, right? The liquidity or the activity, and so that also tells you something about what to expect, right? For
Awesome.
coins and in terms of Bitcoin or altcoins, right?
Perfect. Well, it looks like alt season is back potentially. So we're going to see how this plays out, but I think we're in for a Merry Christmas or maybe an altcoin season New Year. So appreciate your metrics, and all these charts, you guys, right, are powered by CryptoQuant, right? All of the research, all the intelligence, all the data analytics you guys can get through CryptoQuant.com. As a series of these webinars grow, we're going to get into actually more detail in how to create custom queries, what parameters, what metrics we're using, and kind of some of the charts we're developing to give our own alpha. We have some of our own long-term price forecasts that provide the data that shows, hey, looks like where it's going in this context. And so we're going to put these out, and we're going to continue to follow the signal. We're going to be in the flow. We're going to keep this kind of a chill vibe, and we're going to have some different personalities on here. So we appreciate everybody tuning in, and we will catch you guys next time.